I talked about two key emerging risks in Australia. Firstly, in Australia at the moment, the Australian Securities and Investment Commission, Australia's regulator, corporate regulator, is investigating alleged manipulation of the Australian bank bill swap rate. It's a similar investigation to the LIBOR investigation in Europe, and it's expected that in the next few months there'll be some significant findings. The ASIC has already received some enforceable undertakings from some international banks operating in Australia, but it's been described by the media as possibly the biggest banking scandal in Australia. So it will be a very interesting development when the findings are made. What will then happen is there may be litigation against various financial institutions and of course against traders and perhaps the directors. So that's going to be a bit of a minefield for both insurers of financial institutions and for the directors themselves and the traders. And the second thing I talked about was the development of Australia financial review programs for consumers, and there are a number of commercial banks in Australia who are running these programs. The intention is to remediate customers for loss they might have sustained as a result of incorrect financial advice they received a number of years ago. And those programs do raise a number of insurance coverage issues for underwriters. Particularly in Australia, Australia's a very regulated environment, both for directors, and I think directors have got to keep up. They really need to stay on top of the continuing change in regulation. And if something does go wrong, they need to seek advice quickly, and they certainly need to get the assistance of their insurer, because they've got the cover for that reason. They need to involve their insurers early so that they obtain the maximum benefit of their policy.